Think about your retirement account for a second. It probably feels pretty safe, right? Predictable. But what if it was about to get a dose of some of the riskiest, most talked about assets in the world? A quiet rule change is in the works that could put things like crypto and private equity right next to your mutual funds. And believe me, it is kicking off a huge debate about the future of your money. So that really is the central question here. Could these super volatile assets, like Bitcoin, and these exclusive private equity deals actually end up in your 401k? And look, it's not just some what-if scenario anymore. Powerful players are actively pushing to make this a reality, and it's sparking this really intense debate. Is this a golden opportunity, or is it a trap for millions of savers? All right, first up, your 401k's new frontier. So to really get what's going on here, we first have to understand, how did we even get to a point where this is a conversation? Well, a lot of the momentum for this really got started with a Trump-era executive order. It basically told regulators, hey, figure out a way to get these so-called alternative assets into the retirement accounts of everyday people. And just like that, it kicked open a door that honestly had been pretty firmly shut for decades. I mean, to get why this is happening, you really just have to follow the money. We're talking about $12.2 trillion. That's how much money Americans have stashed away in these retirement plans. So for the financial industry, you can imagine getting even a tiny slice of that pie into their, higher fee products. Well, that's a gigantic new market. So what are we even talking about when we say alternative assets? Think of it as a catch-all term for anything that isn't your standard run-of-the-mill stock or bond. We're talking about things like private equity. That's where you own a piece of a company before it goes public. And of course, the one that gets all the headlines, cryptocurrency. Okay, section 2. The promise of higher returns. So what's the argument for making this change? Well, the people who support this, they don't see it as just adding risk. They frame it as, democratizing access, giving everyone a shot at the kind of high-growth investments that, up until now, were pretty much just for the super wealthy. And this quote, which comes from a major financial industry trade group, really nails their main point. Their whole argument is that, look, a lot of today's hottest companies are staying private for way longer. That means regular investors are missing out on those huge growth years. So, they say, this change would finally level the playing field. And here's a little taste of that potential that gets investors so excited. I mean, when you look at some of these predictions, experts throwing around numbers like $100,000, $200,000 for Bitcoin, you can really start to feel that FOMO, right? That fear of missing out. This is the promise of those, explosive returns that supporters say everyone should have access to. But, for every promise of a huge reward, there's a warning of an even bigger risk. And the critics, we're talking consumer advocates, a lot of financial planners, they look at this whole push and see a complete recipe for disaster, especially for your average hands-off retirement saver. Okay, one of the biggest red flags for critics is just the sheer cost. It's a huge deal. So right now, your typical fund in your 401k, it might charge a tiny, tiny fraction of a percent in fees. But these private funds, they play a whole different ballgame. We're talking maybe a 2% management fee times every single year, plus they can take up to 20% of any profits you make. You stretch that out over decades, that difference can absolutely crush your returns. And honestly, the crazy high fees are just the beginning. For one, these private investments, they often have way less transparency. And unlike a public stock, you can't just sell them whenever you want, especially if everyone is panicking. That's a huge problem called low liquidity. And then you have crypto, where the rules for protecting investors, well, it's still kind of the Wild West. You add all that up, and you're looking at a much, much higher chance for losses you can never get back. And some of the warnings out there, they are just impossible to ignore. Listen to this from Knut Rostad, who's the head of an institute for fiduciary standards. He does not mince words. He calls the potential outcome a massive train wreck. And he's not just talking about a little market dip here. He means the total annihilation of people's life savings. And you hear that same warning echoed by financial planners who are actually on the ground working with people. Her worry is about the regular folks, the people whose 401k is their one and only investment account. They're the ones who are most vulnerable. the most likely to chase those big promises of high returns without really understanding the very real risk of losing it all. So that brings us to our next section. What happens to your money? With this incredibly fierce debate raging, what's the actual path forward here? I mean, what really has to happen for something like crypto or private equity to show up in your 401k statement? Well, it's not as simple as just flipping a switch. First, you've got the Department of Labor. They have to officially re-examine and update their rules. Then the SEC has to get involved and figure out the logistics, how to actually make this accessible. But then there's the final hurdle, and it might be the biggest one, your employer. They have to choose to offer these things. And a lot of them might be really hesitant because, think about it, if their employees lose a ton of money, the company could get sued. So this really brings the whole debate down to one single fundamental question. On one hand, you have this promise of more choice, of democratizing wealth, and giving everyone a shot at bigger returns. But on the other hand, you have this stark warning that we're about to expose the retirement savings of millions of people to potentially devastating risks. So ultimately, it comes down to this. For your retirement, is that a risk worth taking?